Good morning and welcome along to another episode of Portal Asset Management's Market Update, this time the month of July. My name is Deryck Graham. I'm the CEO of Portal Asset Management, and with me today is Greg Galton, the CIO of Portal Asset Management. Good morning to you, Greg.
GM, Deryck.
So every month we virtually say this, and that is that there's been a lot of activity this month. There's been some really interesting movement in the market this month. We've seen some whales moving from traditionalists to institutions. We've seen, ETH all of a sudden becoming an extraordinary flavor and the considerable volumes occurring on the ETFs. And we've seen systematic outperform. Let's just talk about a few of those things and where we think we're going as a fund in those areas.
Okay, for sure. So the market more broadly is represented by the CCI 30 was up 17.1% for the month. So very, very strong performance.
Yes.
Bitcoin was up 8% for the month. And then in terms of our funds, the Portal Radiance Multi-Strategy Fund was up 14.9%. So a strong outperformance above Bitcoin, as we always sort of talk about, that 1.5 to 2 beta to the Bitcoin price on the upside. But of course, there will be months when the Bitcoin price is down. Yes, I know there will be times when the Bitcoin price is down, and we will have a higher exposure to the downside as well, because of the gearing that we use in the fund to synthetically cover the options. So just, obviously in the good months we do well, but in the bad months we sort of have that sort of slightly higher exposure to the downside. But net, that all sort of factors out and really sort of drives the outperformance of the fund. So as I said, a very strong month for the month of July. The Portal Digital Fund only up 4.5% for the month. And I think, part of that is some of those traditional pick and hold fund managers didn't really have enough exposure to Ethereum. The month was really driven by a rebound in Ethereum, not necessarily alt season. When the broader market's up 17% and Bitcoin's up 8%, one would imagine that there's been a raft of those smaller cap tokens that have really outperformed Bitcoin. It really was only Ethereum. So I'm not sure that we're calling for an alt season just yet. But what we have seen is a significant amount of spot Ethereum ETF buying, and we've seen a significant increase in the number of companies now that are adopting Ethereum as a treasury security. So we've talked a lot about Bitcoin being used as a treasury asset. Obviously, strategy, and Metaplanet are the key drivers there. But there's been a number of new companies emerge having ETH as their treasury asset. So they've been buyers of ETH. And I think you've also seen a bit of a resurgence in DeFi activity on the chains. The gas costs have been that low that I've actually dipped my toe back into doing some liquidity pool farming into on ETH again. The costs are low enough that it's worth doing, and there has been a large growth in the ecosystem. I think I read the other day that Aave has just reached $3 trillion in total value locked on the ETH ecosystem. So there's definitely a lot of money in there. There has been a bit of a resurgence in DeFi, and that's really been driving the Ethereum price. Now, whether these investors into ETH are sort of suggesting that they've made the decision that ETH is going to be the layer one of choice for the ecosystem for Web3 going forward, I think they might have been a little bit prone to premature extrapolation there. I still think that it's not been sorted yet in terms of who will be the dominant infrastructure layer of Web3. No one's really solved that blockchain trilemma effectively enough just yet. So ETH still does have scalability issues. I know Vitalik is working on that, and he made an interesting comment the other day, which I think is worth repeating, is he wants Ethereum to become invisible. And what he means by that is he wants it to be integrated seamlessly and flawlessly with applications such that people actually don't know they're interacting with a blockchain and with a digital wallet. That's his goal. I think he's probably a long way from that, but everyone in Web3 is. But that's certainly where he's targeting. So I think a combination of all of those factors really saw that jump in Ethereum. It still hasn't got back to its all-time highs. Bitcoin set a new all-time high again in July, and it has done since in August as well. But what has been interesting during that period is that we have seen a drop-off in the volatility. So Bitcoin's vol has been lower for the past 2 to 3 months. We don't see this as being an issue. It's hitting all-time highs on lower vol. What that indicates to us is that the spring is coiling up ready for a move higher. That's consistent with our expectations for the second half of the year in terms of rate cuts out of the US Fed, the supply shock that's incoming, the migration from those OG whales to the new whales, to the institutional buyers, and we think that there'll be a shock to the upside in both volatility, supply shock, and obviously Bitcoin price as we move through the next 6 months. So it's going to be an interesting time to really be aware of all of that happening.
So the Radiance Fund generates its income out of its strategy around volatility. So volatility is good for the Radiance Fund. So we've still performed well during that period of time when it's relatively low volatility. But we're discussing consistently that volatility will grow substantially due to a supply shock. Maybe describe what that would look like if there's a supply shock, and why would volatility increase during that period?
Well, really, that's driven by the fact that, 96% of the Bitcoin have already been mined. A lot of the miners that have previously been selling over the counter to Michael Saylor are looking to engage in their own Bitcoin treasury activities. So they're now hoarding the Bitcoin rather than selling it as they mine it. There's only probably 2 million coins on exchanges, so probably at 5-year lows in terms of the coins available on exchanges. And the bulk of Bitcoin is really held by OG whales. I think it's about 65% of Bitcoin is still held by retail, but can you really class someone that has a wallet size of between 1,000 and 100,000 Bitcoin a retail consumer? They probably are retail in terms of how they react to market fluctuations, but they are sort of institutional size. And a lot of these guys have been selling their Bitcoin, and they got in very early when Bitcoin was probably around $1 or so, and they were mining it maybe. And they've obviously been very, 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 very successful in holding their Bitcoin through the last 10 odd years. And maybe now they're just looking for a liquidity event, and there's plenty of demands. But at some point in time, that dries up. The amount of Bitcoin that's being mined every day is not sufficient even just to match the ETF inflows. So we are still sourcing that Bitcoin from the market. And at that point, that's I guess part of that argument about the digital scarcity of Bitcoin. There are only 21 million coins. It doesn't matter how high the price goes. You can't mine any more than the 21 million. That's really potentially driving that supply shock that we think is incoming.
Interesting. And of course, when that supply shock does occur, people are going to be bidding and bidding and bidding to be able to get access to tokens, and hence the price going up. We're delighted that price goes up, of course, from left to the right. That's important, that there's increased activity, increased optimism to the price. But of course, as a fund, we just look for volatility, because the volatility gives us the ability to stack sats, as you say, or to build Bitcoin itself. The alt season doesn't look like it's here yet. You've got to say, when you talk about the CCI 30 rising like we did before, it's an easy thing to say, wow, that's the alt season running. But if you've got one giant in there moving that, which is Ethereum, that's not an alt season. So are there any indications that the alt season is going to rise? And do you think if it does, are we going to see sort of all ships rise on a rising tide like we have done in the past? Or are we going to see something maybe a little bit more strategic, with venture capitalists buying sort of the best of Web3 and the best of decentralized finance? Or are we all just going to get drunk again and the alt season goes for a run?
I think the argument that is different this time, it does apply. The old adage, the old saying is that history doesn't repeat, but it often rhymes. I think we'll still see a cycle, but that cycle may be subdued. So we probably won't see the euphoric rise up and the parabolic moves higher that we've seen in the past. I think personally that the Bitcoin will probably not cap out this year, that we'll probably see a little bit of a super cycle, and the performance may get extended into 2026, even into late 2026. So there's certainly the pi cycle top indicator is indicating that, and just the level of institutional buying that we've had. We've never had this level of institutional buying in the past.
Yes.
So they become the buyer of last resort.
Yes.
So, and I think there's a lot of tokens out there that are VC generated tokens that have been forced to do a TGE, that's a token generation event, before they have proper product market fit. There's a lot of protocols that you can use without needing to use their token. So to me, that token is absolutely useless. It's really only where there is some sort of revenue being generated, some fee revenue being generated, and where the protocol is either using that fee revenue to either buy back tokens or to distribute to share part of that revenue with token holders. Again, I keep telling people in this industry, when you own the token, you don't own a share in the protocol. It's really a very tenuous link to the protocol. Unless they're offering you a share of revenue or buying back tokens, there is no fundamental link between the protocol's success and the token's success. And that's why you've seen meme coins go for a run, because they don't have any utility whatsoever, but they're just fun. And that's really what drives the market higher sometimes. It is still basically a market driven by, a lot of, young people that are playing around with this. I mean, there are VCs in the space, there are hedge funds, but, it's still relatively small, still relatively immature. And it is maturing. It is maturing via Bitcoin and Ethereum with the spot ETFs. The argument next is who's next on the ETF. So it looks like either Solana or XRP. I can't believe I had to say that, but those are the two most obvious tokens. They're the two next largest ones, and that will potentially get an ETF listed in the US. And there you'll see some migration of profits from Bitcoin to ETH to either one of those two, Solana or XRP. But I don't think you'll see the wholesale shift of profits from Bitcoin into small caps, into medium and small caps, because those investors that are holding the Bitcoin ETF in their equity brokerage account are simply not going to go and open up a wallet and start trading on a DEX. It's not going to happen. Yeah. So I don't think we'll see that lifting of all the boats. I think we'll very, very selective, and it'll be only those protocols that really have revenue or fee revenue or income in some form that distribute it back to token holders that really will drive that outperformance. So very, very specific token picking. So I think some of these funds that buy and hold tokens should do well through that period. But I think also when you look at some of these systematic approaches, the non-directional, uncorrelated alpha, they tend to do well in any market condition. And that's certainly what we're looking at in terms of pivoting the Portal Digital Fund across to some of those.
Yes. And in fact, this month, the top 3 of the 9 funds, again, are just those funds in the Portal Digital Fund, aren't they?
Yeah, that's correct. So, as I said, Radiance was the best performing fund within Portal Digital Fund, up 14.9%. So was the Pythagoras Alpha Long Bias fund that we have talked about as well. That was almost a double-digit return as well. And the other one was a systematic model, machine learning approach. So, and the pick and hold funds, struggled. If they didn't have enough exposure to Ethereum, then they underperformed, because it really was only Ethereum that performed in the month of July. There was huge fanfare about the passing of the Genius Act and the significant rise in stable coins, but that really doesn't do a lot for any of the chains in terms of performance. It's great for payment rails and offsetting the impact of the de-dollarization on the US dollar and all of those sort of good things that it does mean for the US, but certainly doesn't really have any major flow-on effects to a lot of these layer ones.
One of the things that's about this industry that's quite different to equities is just the lack of knowledge associated with how the marketplaces work, how the tokens work even, and where the opportunities are or aren't. There's so much discussion still. We were up in Singapore last week together. There's still so much discussion about what might have happened 5 or 6 years ago. There's still discussion about hacks as a primary focus. There's discussion about Bitcoin finally arriving at an ETF and has been there for a period of time, and they therefore think everything is an ETF. It must be all the others are on an ETF too, because it's a real challenge looking at the world of crypto through a set of glasses that have been watching equities for many, many years. And so we see the opportunities in this space in the long term, of course, being in the likes of Web 3.0, because it's going to be the internet of value. We see decentralized finance as being important and, in fact, will so dramatically change banking that our view is in a decade or so, banking won't be recognizable to the same level of what it is now. We also see, of course, coin now coming into that realm of being an asset that major corporation treasuries are buying, institutions are buying, now sovereign trusts are buying. And this is quite extraordinary. We don't see that change. We see that continuing to grow. But some people are still looking at Bitcoin as if it's some sort of a small asset, or it's a tinkerer, or it's a good little speculator. Just a quick clarification. It's the fifth largest asset in the world. It's overtaken silver, it's overtaken Facebook or Alphabet. It's overtaking, Alphabet soon. It's on its way. It's got it in its sight. We're looking at Amazon as far as where it's heading. It's a damn good chance that it will become that'll become the largest asset in the world. And the largest single asset in the world is gold at some $23 trillion, whereas Bitcoin's sitting at about $2.8 trillion. So, when you explain that to people, like it is 4 times the size of the entire Singapore exchange, or it's 2 times the size plus the entire Australian stock exchange's capitalization. This is not a small asset any longer. Major institutions are going into it, then they're treating it the same. Still has a great deal of liquidity in it. It still acts in a youthful manner. There's still plenty of inefficiencies in it. And those inefficiencies are what a lot of these, alpha generating, non-directional, systematic funds getting return on, as we are too. And we don't see that inefficiency and that volatility drifting away anytime soon. But what I'm saying is there does need to be a reset of understanding of just how big Bitcoin is, 5th largest asset in the world, and how it's now becoming very much something that has a set of regulations around it, and it's becoming very institutionalized. But if you're in countries that don't want that to occur yet, and you're reading the newspaper, you may still think that Bitcoin's used to transact, inappropriate materials. Whereas, of course, in fact, it's just not. And the reason it's not, by the way, is that it's operating on an immutable accounting system, one that you can interrogate anytime you want and track. Much better to use US dollar folding notes. That's their best utilization case, is in drugs and arms deals, when you can put them in pallets and fly them around in jets. But the education level, I guess, is part of the just evolution of what's happening with Bitcoin. So we see in Australia still that the banks think Bitcoin still relates to a scam, the 5th biggest asset in the world. And we still see, I've spoken to financial managers and planners in Australia that have no idea about it, or are too frightened, or don't want to know. But when I quietly say to them, hang on, so you're telling me you don't want to know about the asset that's performed best in the world 9 out of the last 10 years or 12 years? It's kind of like you're missing out, right? And so it is fascinating to see the inertia associated with traditional finance coming into this space. I guess education, learn, right, Greg? It's just a matter of constantly learning.
Yeah, and I think that's part of our role as a fund manager in the space, is to keep educating investors, high net worth investors, and financial advisors, financial planners, and explain to them that Bitcoin is a unique asset class, and yes, it might be a little bit tricky to value, but there are ways that you can value it, and there are ways you can earn a yield on it, and certainly that's that's something that I think a lot of them have issues with. So I think we provide a very good option for our investors potentially there as well. So we're looking to create a yield on their Bitcoin as well, rather than just having a passive exposure to it by leaving it on an exchange or in a cold wallet, or buying an ETF. Yes.
So on that note, year to date, Radiance's strategy with Bitcoin, how many Bitcoin have we generated as a percentage, and what's our return year to date? That's year to date, end of July, isn't it?
That's correct. Hang on. Okay, so in terms of Bitcoin that we've generated, 37.3% year to date to the end of July. And the year to date number for the net asset value is up 36.5% year to date to 31 July. It's the fund's performing very, very well. Bitcoin is just up just under 24% for the period year to date. Again, we are performing as we would expect relative to the Bitcoin price, continuing to outperform the Bitcoin price over the period. Yeah.
And the important thing to note about that's the first sort of half year of reporting in the first year. What tends to happen is, of course, is that it compounds. Every 48 hours, we remove Bitcoin, put it into treasury, and continue to compound it. So the returns become quite impressive in year 2 and 3. That is the goal. Our goal is simply to consider Bitcoin as our unit of measure and continue to compound it as much as possible and grow it Thanks very much indeed, Greg, for the update of the month. Looking forward to seeing what happens in the month of August, and see you all in September. Bye for now.
Cheers.